The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And good afternoon, traders and traderettes. It's another wonderful edition of the Power Trading Hour with me, your humbly, lovably, squeezably soft koala bear of Wall Street at the headquarters of technical trading and investing. It is TFNN.com, where we come to you 5 days a week at 2 to 3 o'clock, where I host my humble but lovable show. Of course, we've got a market that is kind of bouncing back and forth from jobs numbers this morning. They came out horrifically bad, and I don't know what else you can say about it. A lot of people tried to discount it. I suspect we're going to get into the truth of the matter, which is probably bonds. But before that, we're going to take a quick look at the markets, and then we're going to go to news and then go to a lot of charts. I think a lot that people are not talking about now, and make me think that they're going to have some splaining to do, as Lucy used to say. So what do we have right now? We're basically flat, 1 point off on the S&P cash. We've got about just over a hair of 2 billion shares. We once again have gone up to that 1843 mark. Volume is not going to increase. What you don't want to do is banging at that highs for very much longer. But my guess, we're going to get into it in just a few minutes. We've got a lot of probably news to wade through in expiration week next week, and we'll talk about that in a minute. Back to the future. In 2000, on this day, American Online agreed to purchase Time Warner stock. It valued it at $156 billion. I remember probably, I was going to say maybe the last week of January, going up to my accountant doing taxes, and he asked me what I thought about American Online. I said it's a $5 stock, and he was all up in the arms. He'd been involved in all of the huge push higher, and I just didn't understand how a company that was based on dial-up modems would ever be able to last very long. I didn't have a good idea how it was going to go into the future. And, man, what can you say? It went the Time Warner stock up by 39%, but it all ended about as well as the Challenger shuttle event. But what can you say? Just interesting, the quote from that day: "The opportunities are limitless," Burbles Time Warner COO Gerald Levin. But what can you say? It just one of these ideas that everybody talks themselves into with no substance. But we can always learn from these rather dubious honors. Of course, at 11:30 today, the European markets all closed. They were all up slightly higher, but probably Germany and the UK both up 6 7/10% probably, and France and Spain up 6/10. Pretty much the big movers out there. What can you say? It's we're kind of bouncing back and forth in this. It's a big mess over there. I don't know what to say anyway. Anyway, the jobs numbers. What I did want to bring up is that I didn't think we were going to have any higher prices today. The reasons why, easy enough to go to if you look at the TLT. Pretty much, I think we've made a top in the equity markets, and I was looking for confirmation from that in the TLT. You would love to see bonds testing lows on lighter volume and starting to move up here, and I think we've got exactly that. The first low in TLT, August 21st was 13 million shares. The second one on September 11th was 12 million shares. Not enough that we weren't going to get one more retest. We've come back in there a few times, all with lighter volume. Finally pierced it, closed back above it with 8.9 million shares on the 31st. And we've slowly been moving the bulk of stocks probably lower. That's why I look at the summation index and also just the McClellan oscillator. The advanced decline lines haven't been anything to crow about since day one of this year. But certainly starting to see the TLT. And if I don't know what the jobs numbers actually say this morning, this move up in TLT probably tells me everything I need to know. We're back solidly in the trading zone. If we go look at gold, probably another real good indicator of what these job numbers actually mean to us. Last time I looked, it was up about 1.5%, which is about right. So you got a nice little move in GLD. Let's see if we got some internet problems here at this office too. Let's try something here real quick. Yeah, and not getting it right now, but nice bounce up in the TLT. So we'll look at this in a little bit. Other news items I thought of interest was Alcoa. When we actually look at, let's see, where's it at here? Okay, AA. We'll get a current quote for that, and it's off 5% this morning. They had a lot of write-offs, and of course everybody says you just write it off. Just write it off. Well, it didn't look like they were making any money. Actually had better revenues and more business. Still can't make any money on the deal. Holding the $10 got to a low of $9.82. But even now they're priced at 36 times forward earnings, which seems ludicrously expensive for a aluminum company. Five is another company. I don't think you want to be anywhere close to these mall companies. They are just doing horrifically bad. Where's my little... You should be able to... I'm having nothing but issues today. I don't know why this thing is acting so goofy. FIVE. This is a store, if you're not familiar with it, that sells all items below $5, kind of like a dollar store, but in the mall at $5, off $7.60. Off 7.64%, off $3.33 as we speak, printing out at $40.26. And it's a fairly recent IPO. Let me go ahead and try to pull up a chart. And we'll get into that. We've got a phone call we're going to go right to in just a second. I wanted to look at this 5 and see if I'm getting anything else. Program options. Okay. There we go. It came down. It may have made a exhaustion low out here. Certainly blew through the two lower gaps it needed to fill. Anyway, we're going to go to Don in Odessa, Florida today. How you doing, Don?
Hey, I'm doing fine. Thank you for taking my call.
Okay.
I got a question about XLU.
Uh-huh.
Looks like it. Yeah, I might have to wait a day or two on it, but I was thinking about getting an option on it. What would you? Where would be an entry point for you?
An option is a put or a call?
It'd be a call.
Okay. Just wondering. You always got to ask. Well, you got a high volume low, so you'd want it to have this thing test that low on January 3rd, $37.11. And I can't see getting into that stock until you get down to that price point and it gets there with a lighter volume, which is probably a pretty high possibility.
Well, you know what? That's not that high compared to the day before, and now today's volume is higher.
The way I look at it, or at least my system, you had 13 million shares on the 37.11 day, and you had the 20.4 million share day the day. I used the highest volume within the low within 0.5%.
Oh.
So I want it to get back in as close to that low, and I'm willing to bypass some stocks that maybe I'll miss, but I would love this thing to come down, prove the point. I want it to go below it, close back into the trading range, and do it with the highest volume within 0.5% of the low, which is that 2nd of January this year. So,
okay.
That is the conservative way to do it.
Well, let me
ahead.
say this to counter what you've just said and see what you think about it, because I'm not familiar with how you trade, even though I listen to you a lot.
Okay.
On the 19th of December, we had a high volume low and then a rejection of the low, and then we had the test, in my way of thinking, on the day that you're talking about, the 2nd. And then even another test the next day, which was even lower yet. No,
because you still have 2 previous lows out here that have not been really tested, both the September 4th low and the October 7th low. And 2, you still have a high volume low on June 21st that's untested.
Okay, yeah,
so,
I wasn't going back to September. You're absolutely right.
So there's so many previous lows out there. What I'm going to say, though, is that with 20 million shares, you got a good chance of this coming back down with lighter volume, even at that 37.11. I just don't like in my trading, I don't like stocks that basically have a trading range of $1.50 on these lower levels. If this thing would come back down with very light volume over the next, let's see, 4 or 5 days, gets down to 37.11, the volume really comes out, let's say it's 3 something like million shares, just no real interest in selling, then maybe you've got the 39.61 open or the 39.81 open.
Yeah.
And this really just looks like it's in a bigger trading range from probably the 36.55 low to the 39.81 high. So, you're basically trading for about $2 higher or $3 higher and half a buck lower is kind of the risk-reward parameters of this right now.
Well, it's bigger than that on the options.
Yeah, certainly is, but that's...
I understand what you're saying there, so I appreciate this. My thinking, though, when I was looking at this, was I was noticing that there seemed to be a move to safer securities because the expectation the market's going down right now.
There's a book that I had early on. I think it goes back to maybe 2002, and I pretty much subscribe to the theory. It's called Iceberg Risk. If you go to Amazon, you probably still find it. And even if these things will kind of go up as markets go down, as people go to less risky assets, for the most part, for the first couple of weeks as the markets move down, everything moves down.
Yeah.
So that's why I'm thinking, even if you're thinking that this moves down, I would still give it a little bit more time on the downside out here. I think, let me put it this way, I can see what you're doing on options. I would just advise multitudes of patience.
I will take your advice. I appreciate it.
You bet.
Bye-bye.
Anyway, you can call me at 877-927-6648. Be like Don from Odessa, Florida.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to get back into some news. If you haven't noticed the last few days, pretty much since the beginning, end of the year, whatever you want to call it, the dry bulk shippers have just gotten hammered. I'm going to be able to get it here at the next break, but I'll get a chart from the Baltic Dry Index from Bloomberg and show that also. But this has been a specific size ship. They call them Cape-sized ships. And that means that they're good to go around the Cape of Horn, too big to go through the Panama Canal, that kind of stuff. But they've been being slammed for days now on end now. And we're going to look at a few of the charts out here. I suspect this is leading the market and that we've seen the height of trade, at least in China. And I think maybe the jobs numbers are telling us a few things, and that is that we are set for at least a minor pullback in the economy, at least through the first half of this year. Navros Marine Holdings, this thing went up to the highs, and instead of kind of meandering on down, it's come down fairly strongly. The energy, it did have a nice sign of strength on the upside, but it's already broken down through that level. Volume is picking up today on a day that is fairly low. And when you look at candles back in this territory, they were doing 1.3 million shares. We already have 2 million shares today, and at least Navros Some of the other of these stocks out here that are starting to make me interested is Star Bulk Carriers. Why this one hasn't done as bad as some of the others, it kind of looks like it's finished its ABC up. If we go back and look at expansions back here, what do I want? The $5 and probably want this. Let's just go ahead and make it ourselves here. We'll select that as A, let it B, and this low back here as C. And yeah, it's pretty much finished its 1-to-1 ABC up at 13.97. It got to 14.08, and it's come back over. So at least that one's completed its move. When we look at some of the others, we've got John from Philly on the line now, and we're going to go right to him, and we'll get back to these carriers in a minute. How you doing today, John?
Hey, David, thanks for taking the call, sir. Before I get into the security I was calling in about, as long as you're talking Baltic Dry Index, for you and your listeners and people in the den, I have just posted the daily chart of that very index, so you can take a look at it there if you like. It's currently 1,700 is the index. That's down more than 20% from the high in December, about the 9th, 10th, 11th. And the peak at that time was 23.37, so we're down 20%, if not more.
Yep.
So just some data for you there. David, I wanted to ask you about the euro currency, the euro versus the dollar. That's currently trading at 136.70. It has come off a high at the end of the year. It's bounced up today, dollar, of course, weakening with the jobs data. David, I recall sometime, like a window of time, 2 to 4 months ago, you were identifying the euro versus the dollar, and you were using the ETF with ticker symbol EUO, and I believe you were identifying at that time a bullish setup. So that's stuck in the back of my mind.
It was a Gartley pattern, and let's go back and find it because I think it's set up. Maybe I have to go back. Negated it after that. But yeah, there was a Gartley pattern. It was probably, 3 months ago?
That sounds about right.
Yeah, and it got negated, but it went, I think we had a move from 17.5 to 19.20 or something. So he made like $1.70 off the trade, nothing to, maybe 10% move, not anything to giantly write home about.
What I would like to ask you here, I have an interest, as I'm looking at things the way I see it, I'm looking at the EUO and the euro currency in the cash markets as being a upcoming speculation, and I wanted to ask what you saw in EUO at the present time.
Okay, well, we'll get to that when we come right back from this immense Profit Center timeout.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, still have our caller on the line. Are you still there, John from Philly?
Yes, I am, David.
Okay. Here is the original Gartley pattern that we saw set up. I'm just showing it for people that want to remind us where we have. And one of the better looking Gartley patterns when you're actually looking for the textbook of one, and just a good one to look if you want to go back. But that's the one where we took in the low 18s and sold in the mid, I think I sold it maybe 1970 or something like that. Anyway, we're going to go back to your question, which is what's going on right now. Since that Gartley pattern went up to the C point and failed on volume, this thing has been stair-stepping down. What it has not done yet, hopefully you can see here, I'm going to turn off the Gartley so you can see. What it hasn't really happened yet is that we really haven't seen the energy really decrease on any of these 3 legs down. So what I would like is to have one more leg down and see the volume all dry up and then say we finally got a bottom out of this thing. But I think it's going to go back and hit around that $17 level again, and we need maybe a couple times down there, maybe something else, but it just needs, the energy just needs to come out. I like that it tested the last low on lighter volume, 1.3 million shares to 1 million shares on the December 30th low. but the energy in all of the selling in each leg, each time down, really just hasn't had a huge decrease in the energy, and that tells me that it's probably going to get one more skip back down there. I don't know. I don't see anything that says it's going to bust that 17, but I think we're going to at least get back down there, and maybe we're going to go sideways a little while like gold did until this thing bases out and the energy's all down and out of it, and then maybe you get a nice run. I suspect if this energy does come out, the run is going to be to the 1950 level on the EUO.
Thanks for posting that art of the charts picture in the Tiger's Den. When you are speaking of energy on the declines, is the energy to which you refer reflected by those 1.2, 1.2, 1.1 figures I see on the chart?
Yes. Normally I like to see, my ideal trades would be a test of the low on half the volume and see those numbers decrease by half on the down legs, showing me that the energy is coming out of not only the movements down to the lows, but the lows themselves. And so if I just see 1.2, 1.1, I want to see huge differences in both those relative numbers and the actual volume at the lows. Ideally, like I said, the best trades I get are when those are 50% of each either to the top or the bottom. So
thanks for that commentary, David. Just one last follow-up. This security that we're looking at, EUO, this is an ETF,
right?
That tracks the euro versus the dollar. It is a low volume. It's a fairly small market cap ETF. It is a derivative, of course, of the cash currency market. My question is, do you in any of your work look at the cash markets and the currencies in addition to what we see here, this ETF security?
For the most part, I'll look at the ETFs because they have a better history of keeping the same amount of shares in the float. I know that they do create and kill off shares in this over time, but it is 10 times better than trying to figure out the rollovers in everybody's futures and the actual movements in the cash in and out of the marketplace. To me, this is like going out and asking 1,500 people who they want to vote for president. I know it's going to be probably plus or minus 5% of reality. You know what I mean?
Go Governor Christie of New Jersey.
Yeah. But anyway, no, it's going to be close. And 1 million shares a day, anything that has over about 300,000 shares is going to have a high correlation to whatever is underlying it. When you start getting under 300,000 shares, it depends. But for the most time, I don't really think that those tell a true story of supply and demand. There just isn't enough trading and just not enough liquidity in it to give me that flavor of what's truly underlying it. But ETFs, I think, at least in my studies, have been highly suggestive of what's going on. And most of the time, especially when you have things like futures and other things like contangos and stuff like that, tend to have a much better story over time than the story where you may get a skewed result for organic reasons in the futures markets or in the actual market itself for the actual underlying commodity, or in this case, the FX.
Very good. David,
Okay.
Thanks for your time and the commentary. I do appreciate it.
Good enough.
All right.
We're going to our next caller out here, if I can get this thing moving here. And it is Wayne from Mesquite, Texas.
Yes.
How you doing today?
Oh, pretty good. Pretty good. Yeah, I was asking about, I wanted to look at Netflix and ISRG.
Okay. What are you thinking on Netflix?
Well, I was wanting to short them into the earnings. And,
Well, I think that you and me both, and I missed the opportunity. It was going sideways, and I thought this thing was going to spike one day, but the news is already out. Amazon's coming after them. Everybody else is coming after them. You would need a bounce back into the gap up here to get any kind of risk reward correct. and that gap would be, probably about 358. Right now, it's probably going to just continue down. I'm not going to chase it. I thought we were going to get some kind of spike right back into the sixth and the third. Pretty much had wrote in the Tech Insider about how I'd seen the ad, and the ad from Amazon where they're actually coming after the Netflix. And now we've got a couple other companies like Hulu. We also have, one other company, Sony, saying that they're going to start their own streaming system and keep dibs on the movies that they make, so Netflix won't have access to those. And I just have a feeling this whole streaming business is going to get very messy, and we don't know what's underneath it. So I like the fundamentals of being short. At this point, it's just a technical exercise in getting the risk-reward right, and unfortunately, you need a bounce. And I don't think you're going to get one. I think maybe, huh?
Well, I was going to say with that three top, the three gap play.
Yep. This thing is going down to 100. The question is, it is so highly shorted that this thing can absolutely come back and mow you over for a few days and blow you out. And that's why I'm going to say you need to wait until you get a little short squeeze in this thing, gauge the resistance, and then you can pull the trigger. But right now, you're probably at least $28 away from where the opportunity was. And to tell you the truth, I wanted to short the thing too, and I missed it. I didn't get the little hook or a little push that I was hoping for. Basically, all the downgrades came out on this gap down day on the 7th, so everybody knew it was pretty much going to happen, and I was just hoping that the news stayed away so I could get a good entry point, and just never got it. Sometimes you just have to say, hey, I missed it, and go on. And if we get a bounce, I'll short it. But just remember, this thing is highly short already, and you're going to see some wicked intraday movements in this thing, I think all the way back down to probably $150 or maybe lower over the next year or 2 years. So, I feel for you because I've missed it myself. So I don't know what else to say other than that.
Oh, yeah. I was going to ask you about that ISRG.
Yeah, this is a little bit different issue, ISRG. Of course, the big thing that's been hurting this company has been that the government is trying to beat them up over the cost of what their robotic surgery does. I think it's all BS, personally. I think maybe the stock is a little highly priced, but I don't know how to sort those 2 points out. But certainly, are you looking at shorting this thing?
Yeah.
Yeah. I mean, much better short setup here. You've got a gap down with huge volume. That volume came down on 7/19. When's the earnings date on this?
The 23rd or 22nd of January.
Yeah, that would be the only thing, is to get into this and then have some news blow you out. I'd probably want to short it after earnings if you get a chance.
I think the earnings before, one time it went down 90 points.
Yeah, I mean, that's the problem is what are you going to do if they say everything's okay, does this thing go up 40 points? And I think you could see this thing, most of these gaps that are getting filled, just like the ones from Netflix, are getting at least filled 50%. So if I'd almost want to see this thing at somewhere around $450, $455. So if you get a bounce off of earnings, that's where I'd be pulling the trigger, about $450, $455. I mean, it's got a beautiful setup. Unfortunately, a lot of these stocks are going to have earnings, and it's all about what people are going to say, and all these stocks have huge short interest. You know what it is on ISRG right now?
No, it's way up today.
Do you know how many days to cover?
No.
I don't have it here in this office. Let me see if I can find it real quick. Short interest, ISRG. Okay, short interest, shortsqueeze.com has it listed here. Let's see if I can blow it up so I can see it halfway across the room. Days to cover short. 4.4 days. So you'd have a lot of volume if you're on the wrong side of that. So what can you say? I'm going to say too, I would avoid this with earnings coming. It's probably going to continue to creep up, even though the volume is perfect here. There are other stocks out here. I look at for this thing. If you get lucky, you get a bounce to 450. It has massive volume, and it starts going sideways. And then I'd pull the trigger and figure that it's gone back and filled half the gap. But normally that's what I like to see in these stocks, is about half the gap filled. If we go back to your first stock, Netflix, I like this thing had, of course, that massive move down. And it came back and filled 7/8 of it and rolled over on miserably light volume. That was the whole short squeeze. But all the way down, we've had a lot of people adding to those shorts. And, like I said, you're probably not going to get a huge one in this. But I like this one better at 355 than I like the other one at Intuitive Surgical. Netflix, I already know that they're doing badly. And since I have their service, pretty much know that they're not getting a lot of good new movies. So I would rather have this one at 355 right now than ISRG today. It'd probably be a coin flip if I had an opportunity to short ISRG at 450. But, when they've already started to move down, you're pretty much looking too late. Like I said, the only thing that really bugged me was how this topped out on very light volume, and I was trying to give the market a few days to see. I thought maybe I'd get one more push to the top up here at that 383 on Netflix and didn't get it. But certainly both of these things, we need a bounce. If you get a nice, decent bounce out of either one of these, you could probably be short either one of them. But what do you think? You weren't thinking about buying options. You were looking at buying being short the equity?
Oh, no, I was going to do option like probably a put debit spread or something like that.
Okay. Here's another thing I dislike. I think we've got about 30 points down on maybe the S&Ps, maybe 40 points next week. So I'm not expecting any 100 or 200 point moves. And you're probably going to get a little bit of pullback, but it's probably all going to be on light volume. I'm kind of looking for a bounce out of that options expiration. And in that bounce, I think we're going to see the next real volume move, probably light volume up, and then the volume's going to come to the downside as this market pulls back. So I wouldn't get too greedy right now. I think we're going to have some opportunities to wet our beaks on this move over the next week or so. And then after that, probably a little bit of a bounce. And then we're going to probably get a lot of opportunities to go after these stocks that we're looking at today.
Okay.
Okay? So I'm just patient. Doesn't mean that you're going to get it. And like I said, I missed Netflix myself. So it is one of those things. But I'd rather miss it than be on the wrong side of the trade. We'll be back in a minute. I want to thank everybody that called today. Anybody that wants to call again can. At 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, trying to look at a few of these stocks before we close the day out. But certainly I see Tom O'Brien in the bullpen. We're going to be together at 4 o'clock for the Tech Insider Hour. Going to be interesting. We're going to go through a lot about what's going on this week at the Consumer Electronics Show, and some of these stocks that are doing well and some of these stocks that are not doing so well. On the Tech Insider, got a lot of new, really cool gadgets that came out this week. Consumer Electronics Show, kind of a bust. For past ones, for products that are coming out, any day now. But we're seeing kind of a taste of what's going to be happening in the future. So you don't want to miss that segment with Tom O'Brien in the 4 o'clock hour today. We're going to be going through a lot of them. Going to be doing a lot of charts in the market also of technology and what I think is happening to them. One of the ones that's kind of interesting today is Microsoft, MSFT, Mr. Softy. A little bounce out of here today on Microsoft. I've been watching this thing and whether or not it was going to come down and break these lows. Certainly back at the support level. Volume really didn't decrease from the previous December 18th. The little bounce out today is because of people talking about Bill Gates coming back to Microsoft. I don't think that's a big opportunity. If you know the inside story, his kids have been, they've attempted at least twice to kidnap his kids and hold them for ransom. One time it was several people in his staff at his house. Actually installed a bunch of equipment at his house, God, whatever, 15 years ago. We went in and put a bunch of stuff together. A huge security staff, but they've already tried to kidnap his kids twice, and I think even him a few times. So he's really wanting to stay out of the limelight. I don't think that he would ever come back to Microsoft. You know, weirder things have happened, but at the moment they're looking for a wonder kid, somebody probably under 45 to take over the company and give it some vision. And right now it hasn't been any of the people that Bill Gates has liked. He, of course, is selling shares every single day of Microsoft. He has been since 2001. He will totally be out of the company in 2017. So he only has about 2.5 years of selling before he is no longer a shareholder of any shares of Microsoft. Of course, a lot of that goes to his trust and his philanthropy, but at the same time, half of it's coming back to him. He is still I think he was still rated as one of the highest net worth individuals, even giving half of his money away. So when we look at this, what really I'm going to be watching next week is, as we go into these last few days, how Microsoft is set up. And, of course, we've got a lot of other stocks coming in on Monday. Amgen, Charles Schwab's Wednesday, I can't even say it, Wendy's. Tuesday, Wells Fargo, J.P. Morgan. Wednesday, Bank of America. Most of these are financials. The only real big tech stock is Intel on Thursday. So I think we probably have a light week on technology, heavy on these financials, and I suspect that they will all probably trade down slightly on guidance. At least that's the way I'm looking at the charts now. So we'll be back with you in about an hour and 20 minutes talking technology, and I'm going to be showing some charts and what I'm thinking is happening in technology in the near future. Anyway, remember, sell when you can, not when you have to. And see you again, same bat channel, same bat time, Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.